24 hours with JB. Let's talk. So I was chopping it up with a young brother yesterday, and throughout the midst of us talking, I was pretty much just telling him, yo, don't overthink the investing. If you have to go somewhere, you're taking the Uber to go there, right? In the event that you're not driving or taking the train, right? If a show comes out, etc., boxing match is going to be on Netflix. So thus, just use that concept, do your due diligence always, but understand how the majority of these companies, you're on the consumer side of things opposed to the investor side of things. And with that being said, he shot back to me. He was like, yo, you know, that's funny because had I been thinking, i.e., had I been in my bag, I would have purchased the Knicks. You know what I mean? He was like, I could have bought the Knicks, so I could have bought. And I was saying to myself, damn, the Knicks don't. But come to think about it, they do. Not the Knicks per se, but Madison Square Garden. A lot of people don't know that you can actually invest into Madison Square Garden. Ticker symbol MSG, right? MSGS, right? Yes, Madison Square Garden. And for starters, this particular, again, ticker symbol MSGS, right? Madison Square Garden. The ticker symbol, or the stock rather, it just hit a 52-week high, right? Or its 52-week high for that matter, which is $392.56. Whereas its 52-week low is $186. So thus, I wouldn't advise someone to purchase the stock now due to it being essentially at its 52-week high. But let's say for myself, let's use myself as an example. Had I been watching the basketball season all along, or had I been in tune with the NBA, I would have purchased this particular stock months back or even last year, right? Reason being, I know that the more the Knicks advance, the more that their stock is going to advance as well, right? The stock being MSGS, right? Madison Square Garden. You're essentially buying into Madison Square Garden, right? From a public perspective, from a retail investor perspective. Let's just say that. But again, beloved, for the stock to move from $186 to $392.56 throughout the span of 52 weeks, that's very nice, beloved. And if you even look back to, let's even go back 6 months ago to see where the stock was at. My point exactly, it was $229 6 months ago. You take it back 52 weeks, like, right, $181. So for quite some time, it was trading at that. So essentially what I'm saying is that would have been the time to invest into the stock. Reason being, you could have doubled your money, right? That's 100+% return even, right? But again, we don't know what we don't know, right? That's actually 102.94% return you could have gotten had you invested into the stock 52 weeks ago, i.e. a year ago. And from my understanding, or my recollection rather, the Knicks went to the third round of the playoffs last year. So thus, we knew they had potential. So had I been in my bag and had I been doing my due diligence and had I been a true Knickerbocker, I would have invested into the company back then because I know, I could have foreseen that the Knicks were going to do what they did this year or what they're currently doing. Shameless plug, heavy on investments. Let me take a sip. And with that being said, okay, we go into the beta. So we're going to check a few facts, right? A few stats about the New York Knicks. So, Madison Square Garden, rather, they have a beta. Beta basically measures the security of a stock, right? Compared to others in that industry. Anytime you have a beta of 0.59 or anything less than 1, that tells you that the stock or the investment, rather, has a low risk, right? So that's a good sign to invest, right? The stock has low volume even, right? 155,081. So that tells you a lot of people are not actively trading this ticker symbol back and forth, right? They reported earnings in May. So that when companies report earnings, that tells you how well the stock as well as the company is doing. Sorry, that tells you how well the company is doing, which effectively causes the stock to go up or down, right? To plummet or to rise, we would say. Okay. Its 1 year target estimate is $398.17. Beloved, they damn near did that, right? For $6 more, they did that. So this is good. This is good. Let's check the financials. I'm a numbers type of guy, so thus I always like to see what's going on from a financial standpoint. So, from a revenue perspective, Madison Square Garden is making $1,000,000 and $1,039,220. $1,039,220, right? And what's interesting about that particular number, so we're looking at the total revenue, right? I.e. the top line. Anytime you hear anybody in business refer to the top line, they're essentially speaking about sales or revenue, which are the same thing, right? So we're looking at the total revenue again. It's currently at $1,000,000, right? So 3 years ago, that revenue was at 821. Sorry, these are large numbers. $821,000, right? Then it went up to $888,000. So you see the revenue increasing over time. So that's always a good sign. Anytime sales are increasing, that means more seats are being filled essentially, and people are buying into the business and or the company, right? So we see the revenue, right? The top line increasing. So let's get into the total expenses, right? The total expenses are increasing as well, right? $735,000 about 3 years ago to this day and age, or this current day rather, it's at $1,000,000. So I'm not fond of the total expenses increasing, but we have to see what that increase is about, right? And with that being said, they have to be negative on the income side of things, right? The net income side of things, because I gave you the top line and then I gave you the bottom line, right? You always want your bottom line to be higher than your top line. Reason being, your top line, as you could see, it was $1,000,000, but that $1,000,000 you have to subtract. I'll give you examples, even real life examples. You have to subtract the pre-tax income, tax provision, basic EPS, operating income, right? This is where you get into accounting. Essentially, you have to subtract things that cost the business to run, right? And once all of those subtractions or deductions take place, that bottom line is your net income. That essentially tells you if you're profitable or not, right? And in this particular instance, well, look, use your mind. I told you that the top line was $1,000,000, right? Close, basically 1,000,000. And then I tell you that let me see. The total expenses equate to basically $1,000,000 as well, right? A little over 1,000,000. But if you subtract the top line from the bottom line, it's negative, because that's 1,000,000 minus 1,000,000. It's essentially what I'm saying. And that causes the stock, or the net interest income rather, to be negative. Now, with that being said, I do see, it's increasing further or decreasing further into the negative territory, which I'm not fond of. But again, you have to bear in mind the KNICKS, as well as Madison Square Garden, right? They've been suffering for quite some time. So thus, they're probably just readjusting the numbers, right? Let's check its balance sheet. That was the income statement. The balance sheet gives you a better snapshot of what I just spoke about. So the total assets on the balance sheet, close to $1.5 million. But again, the total liabilities, and this is what I'm saying, is close to $2 million, right? So the equity is in the negative, right? It's not a good sign, and I'm not fond of that. The equity is in the basically a little over $250,000, right? From an equity standpoint, it's not good, but we don't know what the future will hold, right? And people are probably investing into the company due to the potential growth. Now, the free cash flow, not bad. Their free cash flow is increasing, right? We like to see companies with an increase on strong free cash flow, because that free cash flow could potentially be reinvested into the company and cause the company to thrive even more due to the capital expenditures, or the repayment to its stockholders rather. Okay, so And let's just check one last thing. I want to see who the holders of MSGS are, right? This is imperative to me because you want companies such as, right, BlackRock, Vanguard, you know, let me see, Silver Lake. These are all big dogs, right? State Street. These are all conglomerates who essentially control the masses of the stock market. So if we see them invested into the company, that's a good look. But see, they probably had insight